Good morning, traders, and welcome to BCI's morning market outlook. First up, let's talk about the US dollar. The DXY remained near its yearly highs as markets continued to price in a more hawkish Federal Reserve. Strong US economic data, elevated inflation, and expectations of a September rate hike have supported the dollar, while weakness in major currencies like the yen and euro has also added some further strength. Investors are now focused on Thursday's US non farm payrolls with reduced market liquidity ahead of the Independence Day holiday, likely to increase volatility in markets. From a technical perspective, the dollar's broader uptrend remains intact, although much of the bullish outlook has already been priced in. Initial support is seen around the psychological 101 level, followed by the 20-day moving average at around 100.53. On the upside, resistance is located at 101.39, with further targets at 101.80 and the psychological 102 level. Next up, let's have a look at crude oil. WTI has traded around $69 per barrel after recording its steepest quarterly decline since 2020, as improving US-Iran relations and recovering tanker traffic through the Strait of Hormuz continues to ease supply concerns. Markets are also weighing rising exports from Iran and Russia against seasonal demand, with the recovery in supply expected to limit the upside momentum. Technically, WTI has settled back into a medium-term consolidation range, with the market rebuilding a new price base around $70. Resistance is seen at the 9-day moving average around 71.6, followed by the 200-day moving average around 73.15. On the downside, key support is located around the psychological level of $68, with a break lower exposing the $65 area. Next up, let's have a look at gold. Gold has traded around 4,030 per ounce after suffering its largest quarterly decline since 2013. Expectations for further Federal Reserve tightening, elevated inflation, and stronger US dollar have continued to pressure gold, while investors now await this week's ADP and non-farm payrolls data for the next major catalyst. Despite the recent sell-off, central bank demand continues to provide longer term support. From a technical standpoint, gold remains under heavy bearish pressure, trading well below its key moving averages. Initial resistance is seen at the 5-day moving average around 4,064, followed by the psychological level of $4,100. On the downside, support is located at the recent multi-month low of 39.59, with a break below opening the way towards the psychological level of $3,900. Lastly, let's have a look at the Australian dollar, which has remained under pressure around 68.90 after weaker Chinese manufacturing data and a stronger US dollar weighed on sentiment. Minutes from the RBA's latest meeting reaffirmed that policymakers remain prepared to tighten policy further if inflation persists, but the pair continued to struggle as markets favored the US dollar following the Fed's more hawkish outlook. Technically, the Aussie dollar remains bearish while trading below the 14-day moving average and the psychological 70-cent level. The 200-day moving average at 68.63 provides immediate support, followed by 68.33 and the psychological level of 68 cents. On the upside, resistance remains at the 14-day moving average around 69.67 and the psychological level of 70 cents.